Up YouTube? Just wanted to give you a little update on the being the bank strategy I mentioned yesterday. Just lending money to some of the other online investments or on some of the other platforms. Well, before we get started, just in case you're new here, I'm Joe Catrapalia. I'm a real estate investor. I also invest in private mortgages, and I'm an agent here in San Antonio, Texas, who helps other investors buy investment properties. So, and lately I've been spending a lot of time on some of these online platforms where you can buy properties, you can invest in some debt. And so yesterday I mentioned the debt investing. I've talked about it a little bit. There's really, the main platform that I've been doing that on is Ground Floor. And so far, I've just been on here a couple, not, I don't even think 2 full months, but I just put a couple deposits on here, bought, I think it's a total of 38 loans. Yeah, 38, and they're LRO investments. They're actually securities that are backed by these small loans. I actually really like this site for, just being able to buy a bunch, just trying to be really diversified. And you can see the breakdown of, these grades. You can look on their site and figure out what those mean. And, I've just been using their wizard. And so their investor wizard, which, um, basically allocates, it's basically buying, um, using the moderate strategy that I use. It basically buys all the, one of every, a little bit of every one that's available at each time. But so one of the things that I like about this platform is you're buying that debt, basically right when it's being created. And then once it gets paid off, you get paid out. And so there's very little lag, meaning all of your money, you might buy it and it doesn't quite close yet. And so you might like lose, maybe a couple weeks of interest or something. But in general, your actual return should be very close to what this interest rate is. One of the things yesterday I was talking about, I just bought a couple of tokens in this universal lending DAO on Lofty, and this is another one where so this is set up quite a bit differently. They are raising money by selling these tokens for $50 each. They sold, 400 or 4,000 are available, so raising 200,000. When I was looking at this, their estimated APR is 13.5%, and that does seem to be what they're lending the money on. But after I clicked through and bought it, it shows that my projected rental yield is only 6.7%. And to be fair, if I had gone back out to the main page and looked at their yield, it matches up with there. So that was just a matter of me missing it there and just only looking at that main page. Oop, let me get back over there. Uh, I think what's happening here is that they raised 200,000, but have only lent out about 100,000 or around 100,000 so far. And so, which means, that's why your interest rate is cut in half on that. And so, half of it matches up almost exactly right, right? Half of your estimated APR. Um, so your interest rate's much lower. I think there's a good chance that this gets fixed over time by having more and more of the available funds lent out. But it is one of the downfalls of investing in these pools instead of investing in the individual loans. Um, one of the benefits, you get a lot of efficiency with this, right? You're getting, each time a loan is made, I'm not having to go in and buy something new, although they are asking you to vote on whether or not that loan should be made. Um, but it is, you're not, you end up having what, a lot of times I call like a lazy equity, or you have that money that's sitting there, it's not doing anything, or lazy cash, right? And so I don't know. It'll be interesting to see how this works over time. I still don't hate this investment because I got a little discount from and very little, but it helps. But I think I'm going to stick with what I was talking about yesterday, which is buying on the dips of this because that 200,000 is still sitting there. If this was liquidated today and everything was paid back, you should get very close to your $50 per token, minus transaction costs. And so, the price I paid when I bought it, like the fees. And so I think that especially when there are dips, and you can see like in some, during some period of time, there's been some really big ones. I'm still going to try to pick up tokens that come up for this cheap. But it is, I don't love how this is working at the moment. I didn't mention this yesterday, but this is one that I had looked at Lambda, and I mentioned Lambda probably a couple weeks ago, and then haven't really talked about it much since. Um, they just took forever to take my money, and now they're finally doing it, and I should be able to start investing relatively soon. But this is their, opportunity to be the bank, right? It's actually a fund that's raised this money. They've made 9 loans. Their interest rate is here. But again, if you look at, I was looking at, okay, so what if I annualize the dividend that they paid out the interest that they paid out most recently. And so I go 54.94.48 times 12. I'm going to divide that by the 1,154,370, which is the total money they raised. Yeah, you're not really getting that full amount, right? Like this dividend does not equal, it's not that 8.5%. And my guess is that they have raised money that's not lent out, or there's, some of these frictional um, costs as far as not 100% of the money. Um, oh, okay. So here's your utilization rate. Well, that doesn't even seem like it matches up. Yeah, so this shows you how much is in cash and how much is in mortgages. So that's really interesting. So your utilization rate seems actually pretty good here. So maybe this dividend, they're just not actually paying it all out. I don't know, but in any case, this is what I'm trying to figure out. So on the debt side, if that's the goal, it still seems like ground floor is the clear winner for me. I think I mentioned before, I have a subscription where you can get some free money. It's not super clear to me. Oh, okay, this has gone back to 50. This number actually dropped down to 0 at one point, and I think that was just them making there's some glitch in the system, but they did give me I think I got $200 for it's based on how much your initial deposit is, so that you do get some free money. It's not a static amount like with the Lofty token, but it is it varies how much you put in, but for 10,000 they gave me $200 to do that, and where I also think you're just getting a good return on it, or at least it looks like you will be. Obviously there's always going to be um, risks, and you need to look at it yourself. I'm trying to get back to the window that I was on before, but I don't. I'm trying not to open certain pages in my accounts on this. That's why sometimes it seems like I fumble around more than I should. Is that there's certain ones that I don't want to have to go back and blur out my account info later, and so getting to some pages is tough. But in any case, that's the update on the debt. I also wanted to mention this. I mentioned that I'm buying tokens on this property here, or that I bought some yesterday when there was a big dip. You can see. Let's see. Let's just look at the 7 day. It was all the way down to 50 because somebody was liquidating tokens yesterday. I bought in around here. I think this was actually me exactly 56.63. It's all the way up to 62.50, which is back close to what I think it was being valued at on this site to begin with. Um, this is one of the opportunities. I just really think this is one of the things that makes this interesting, because this building didn't change in value, by 10% over the last day, or 12, whatever. I mean, 50 to, I mean, that's even higher, closer to 20%, 52 to 62. Um, they definitely didn't change the building value, right? And the value of it as an Airbnb. And so this is really just about being a thin market and illiquidity. And it's creating just, quite an opportunity if you can pick properties, figure out a price that you're very happy buying at, and um, just watch for those dips and those opportunities to pick them up. And I think that there's just that's what I'm most excited about this. Now, at the moment, frankly, you can't put a ton of money in, right? I mean, buying 20 tokens yesterday when I bought them, did I buy 20 or 10? I think about 20. Moved the price up almost $2, right? So it's super thin, right? Like, I mean, that's less or just over $1,000 worth. And so, I think over time, yeah, there'll be more and more opportunities, but it will, unless you get bigger properties or larger pools of funds, I think that, there won't be opportunities for huge profits like that in for large sums of money. But if you're someone who's willing to spend some time and making a 10% return on $1,000 investment in 2 days is worth it to you, and it doesn't, it's not 2 days of work, right? You just do a little bit of research up front, wait, get in there. If I went and sold these today, it's well, I'd make less than $5 a token after all fees and everything I paid, but it is still it's 20 tokens, it's $100, right? And that's if I were planning to do that. That's not my goal. I'm not trying to trade these, but I'm trying to get into them at a basis that I'm happy with. But I'm able to do that because of this volatility. And this should have hit me in the face earlier because they have these little charts, and maybe these charts haven't been on this page the whole time I've been on here because they do add features all the time. But if you look at the volatility of these tokens, it's unbelievable if you think about the fact that these tokens represent ownership in a piece of real estate that is just not there. That real estate, if I appraised it today or yesterday or 2 weeks ago, it's not changing in value that much. And so somewhere in this chart, the price is wrong, right? It doesn't match up to what we should be paying today. And so, doing our own due diligence, figuring out where that price point is, and, just basically picking up anytime one of these falls below that, just grabbing some tokens. It seems to me to be the real opportunity on this site. I think that, I am interested in holding these long term, so I'm not planning to buy and sell very often. But if I think sometimes if the price gets significantly over what I think the liquidation value is, I will do that. Because I've actually looked through these. There's a lot of delinquents and vacant. That just hit me when I was scrolling. It's as you get down to the cheaper. No, these aren't organized by cheapness. What are they organized by right now? I'm not even sure. In any case, I just wanted to give you an update on those two strategies. On the being the bank and on just setting a price that you're happy with, and then just picking up tokens as they get cheap. I think both of them, you can do very well if it's something that you're executing, even just somewhat intelligently. I mean, especially if you're just buying the debt. Obviously, like I said, I mean, there's always risks, and you need to, do your own due diligence and look at, what your downside looks like. But they've made it very simple on these sites to be able to do that and to be, um, to get a fairly good return, and with a risk that I'm comfortable with. In any case, so shared with you some insights that I learned, but also this big mistake, right? Like I missed that this is going to be lower than I expected initially, at least. In any case, I'm going to continue to make these mistakes so that you don't have to. Till next time.